Welcome back to Candlestick Signals for today's market. August 21st, 2025. We're diving deep into the candlestick signals that are shaping today's trading landscape. Buckle up, because we've got some intriguing patterns emerging that could make or break your portfolio. Let's jump right in and decode what the charts are telling us. Our first focus is on the technology sector, which has been a roller coaster ride today. After leading last week's rally with an impressive 8% gain and a market capitalization change of $57 billion, we're seeing a different story unfold. The sector formed a bearish engulfing pattern today, the NASDAQ falling 142 points to close at 21,172. This reversal signal suggests that sellers have regained control, at least in the short term. Looking closer at the sub-industries within technology, we're noticing divergent trends. Software and IT services were the heroes last week with around 8% gains each. Today, they're facing headwinds. Hardware and storage, which had a weekly return of approximately 7% last week, are also showing signs of weakness. The sector's RSI is falling, indicating that sellers are gaining ground. However, it's crucial to note that the long-term trend remains up, with moving averages across 21, 50, 100, and 200 days still rising. Shifting gears to the basic materials sector, we're observing a mixed bag of performance. Unlike last week's moderate growth and 3.8% increase, which translated to a market capitalization change of $28 billion, today's action is more subdued. Selected materials stock leaders like Newmont and Agnico Eagle mines are holding their ground, but the overall sector is struggling to maintain momentum. Now, let's dive into the market snapshot for today. The candlestick structure for the S&P 500 is particularly telling. We're seeing a bearish candlestick close, situated just above the 21-day moving average, but under the upper Bollinger Band. Despite the day's weakness, the intraday candle left a long shadow, which is often a precursor to short-term bounces. This suggests that while bears may have won the day, bulls aren't out of the fight just yet. A key bullish formation caught my eye on the 15-minute charts. At 14:45 ET, we witnessed a KDJ Golden Cross coinciding with a Bullish Marubozu. The Marubozu, characterized by no lower wick and a long upper wick, signals strong buyer dominance and little seller resistance. Historically, these patterns tend to precede short-term upward momentum, so we could see a bounce in select sectors tomorrow. Let's break down the technical indicators for a clearer picture. Momentum is falling, but still positive, suggesting a weakening but not negative trend. The MACD has confirmed a down signal, pointing to short-term bearishness. The ultimate oscillator is rising, hinting at a possible bounce. However, the slow stochastic is overbought, with a down signal, indicating a risk of correction. The rate of change is falling, suggesting a risk of lower closes in the near term. For those planning their trades, here are the key levels to watch. Now, let's spotlight some sector and stock highlights. The healthcare sector is showing the strongest bullish signals today. Conglomerates such as HCA Healthcare and Cosmos Health are displaying both the KDJ Golden Cross and Bullish Marubozu patterns. This technical strength is underpinned by robust Q2 revenue and profit growth, expanding margins, and digital innovation. Healthcare is emerging as the standout sector by capitalization today. The energy sector, despite benefiting from macro volatility, is showing signs of strain. Large caps like ExxonMobil and Chevron are facing valuation concerns. Energy stocks are grappling with regulatory and supply chain headwinds, and they lack the technical convergence we're seeing in healthcare. In the retail sector, Target's weak outlook led to a 6.3% decline today. However, broader retail stocks, particularly Walmart, have the potential to trigger market bounces if earnings exceed expectations in the coming days. The technology sector continues to see profit-taking in high valuation names as traders rotate out from overbought territory. This aligns with the bearish engulfing pattern we discussed earlier in the falling RSI we're reobserving in tech stocks. Let's talk sentiment and outlook. In the short term, we're looking at a bearish to neutral stance, with a risk of further downside, but potential for intraday bounces, especially if retail earnings surprise to the upside. Institutional flow shows accumulation persisting in lagging value in defensive sectors, particularly healthcare and select retail stocks. The market tone maintains a firm undertone supported by rising moving averages. But macro uncertainties and weak sentiment in tech are weighing on overall market performance. To give you a clearer picture, let's look at the major candlestick formations by industry capitalization. In healthcare, the KDJ Golden Cross, combined with bullish Marubozu patterns, suggests a short-term bullish outlook. With leaders poised for upside, notable tickers here include HCA, Cosmos Health, and HealthStream. The energy sector is showing bearish trends, with shooting star and inverted hammer patterns indicating waning momentum and valuation concerns. Keep an eye on ExxonMobil and Chevron in this space. Retail is characterized by bearish closes with long lower shadows, signaling volatility. Walmart and Target are the stocks to watch for potential bounces. In technology, we're seeing bearish engulfing patterns and falling RSI, suggesting further correction risk. Key players here are NVIDIA, Intel, and Palantir. As we wrap up today's analysis, remember that the U.S. market for August 21, 2025 reflects a nuanced, technical landscape. All headline indices exhibit outright bearishness. Select industry groups, especially healthcare, show powerful bullish formations backed by robust earnings and resilient fundamentals. Your trading focus should center on sectors displaying technical convergence, notably the KDJ Golden Cross and Bullish Marubozu patterns. Exercise caution in overvalued or overbought industries like energy and technology. Keep a close eye on developments from the Federal Reserve's symposium at Jackson Hole and major retail reports, as these may set the tone for the next market move. In conclusion, today's market action paints a picture of sector rotation and selective opportunities amidst broader uncertainty. The bearish candlestick close for major indices, coupled with the bullish formations in healthcare, suggests that a discerning approach to stock selection will be crucial in the days ahead. Stay alert, stay informed, and as always, trade wisely. Thank you so much for watching. I hoped this video helped you out. We will see you back here tomorrow. Before you go, please leave a comment, smash that like button, subscribe, and click the bell to be notified when new content is available. The information presented in this report is intended solely for entertainment and informational purposes and does not constitute financial, investment, or trading advice. All opinions, analysis, and statements expressed herein are personal views and are not recommendations to buy, sell, or hold any securities or assets. Market data and any related commentary are provided as is and may not be accurate, complete, or up to date. Neither the author nor the publisher assumes any liability for financial losses, damages, or other consequences resulting from actions taken based on the information contained in this content. Please consult with a qualified financial advisor or conduct your own independent research before making any investment decisions. Investing in financial markets involves risk, including the potential loss of principal. This content is purely for entertainment purposes and should not be relied upon for any financial decisions.